the part of the ICT mentorship that I'm going to backtest here is from episode 1 to 5. I'm going to, do bits by bit. And really, what I'm backtesting is not really the strategy, is my ability to annotate the chart and really respect my entries and my speculations, and go along with what I prepared, rather than trying to jump on a trade too early because I think I see an opportunity and whatever. That's really what I'm trying to train on at the moment, because that's what really takes a lot of my money. It's annoying, so I need to train on that, take a lot of notes, and yeah, this is me doing it. So I'm using a platform called FX Replay. I quite like the platform. It has some bugs, but so far, in terms of backtesting, if you're not using something like NinjaTrader or or anything that's similar, this is something I found very interesting, especially for Mac users. If you're on Mac, check this out. They are pretty cool. I'm not paid for this or whatever. Literally, it's a very practical backtesting platform, right? It's like $35 a month or something. Anyway, so I'm backtesting S&P 500. As you can see, the strategy here is ICT mentorship, and in the strategy, really the setup is literally market structure and draw on liquidity. Entry is the fair value gap, and the target is any low hanging fruit that I can see on the chart. I'm trading with a 500 balance, and my start date is the 3rd of January 2022 all the way to 8th of December 2022. Right, so let's jump into it. Right, I don't really look at the market from a 4-hour chart perspective on S&P. Not really interested by it, and yeah, that's pretty much it. But right now, what I can see um, right away is that the market is very, very bullish. We are very, 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 very bullish. I don't even remember trading this period, but yeah, we are very bullish here, and the market just did something quite interesting. We just traded down this volume imbalance. I think, is this the 50% of it? Volume imbalance. Yes, literally traded to the 50% of it. So, which is a good thing. But at the moment, although we are very bullish, when I look at the current structure of the market from a 4-hour perspective, although we are very bullish, I quite like what I'm seeing here to take a sell position. Um, First of all, we have this relative equal highs right here. Sorry, I meant to say relative equal lows right here. And at this point right here, we kind of have some sort of you know um, grab of liquidity, and then you have a displacement. So this to me is a good it's a good reason to be looking for sells, maybe around this order block right here. The lower time frame is going to give us more information about this area right here, but around this order block is probably a good area to take a trade, to trade to the downside, at least to take out these lows. So what date is this? This is the 30th of December, and this is the 2nd of January, which means um, the previous day of trade was the 30th of December. So I believe this would be our previous day low. Okay, area of liquidity, and this is going to be our previous day high. Previous day high. All right, so we have these two established. Actually, I'm going to make them bold. Right, we have these two established. Let's now jump on 1 hour. So yeah, I'm bearish at the moment all the way to this point, but I do want to see something from a market structure perspective. If I plot my fib from this point to this point, I see that the 50% resides here, which is equilibrium. So the 50% resides here, but that's just too far down. I'm not sure if the market is going to go all the way down here, but I would expect the market to, trade all the way to this level, the 38.2. So I will mark this as 38.2 fib 4-hour level. All right, or 4-hour target. Let's just call it 4-hour target. So if the market was to trade heavily to the downside, that is, this is the first area that I'm looking for a possible reaction that would give me a buy or whatnot. Actually, I plotted this wrong, so yeah, it would be somewhere here. Right, so that's the first thing. This was a 4-hour analysis, but then again, I just did it on the fly because I don't really use the 4-hour to look at the market, at least not often. So I'm going to be jumping on a 1-hour as taught by ICT, and this is where we are. Okay, so now from a structure perspective, let's just analyze what I'm looking here. So obviously we have these relative equal lows that have been taken out. Right, we have these relative equal lows that have been taken out. We have this draw on liquidity, or at least sweep, I guess, whatever the terminology is. I don't even know for sure. And right after this grab of liquidity, we have a displacement. So we have this huge fair value gap going on, and you also have this ICT order block going on here. So if I put my fib, if I want to believe that we are bearish and I put my fib right here, we are literally trading already at the 0.62 level from the OTE level from ICT for people who are aware of it. We are literally trading into it. Now the question is, where is the market going to reverse from? Are we reverting from this fair value gap area, this OTE level, or are we going to try to trade into a more premium array, which is in this case this order block right here, right? So that I don't know for sure. So I need to jump to the 15-minute time frame. So on the 15-minute time frame, we already established that we have impulse-based impulse here. So this right here was liquidity, which has been taken out to the upside. So this right here has been taken out. We traded down. We failed to trade below this, and we tried to trade upwards. And actually, one thing that I noticed again as well is we have this relative equal lows that have been taken out right here. As far as internal liquidity is concerned, relative equal lows taken out. We trade to the upside. Now, where are we going to trade to? We need to trade into an area of either, into a PD array. Now, the PD arrays that I'm seeing here at the moment are this order block. So I'm going to mark this. This is the, yeah, I need to stop it here. So I have this order block, bearish order block. I'm going to change the style to dotted. So I have this bearish order block, but I also have this fair value gap right here. And the reason why I'm marking this fair value gap is if you watch ICT episode number 2, the way he identifies, wait, I'm going to show you. I don't know if it's possible even for you to see this, but if I just go on episode number 2 here, I don't know if, right. So if you look at the way he identified this fair value gap, you're going to see that you have a swing low right here, a nice swing low as taught by ICT, and then you have a huge displacement leaving a fair value gap, in the middle. So you have the high of this candle, the low of this candle, fair value gap. That's what you're targeting. And one thing that I do know about S&P is that these fair value gaps always get, retested one point at some point, right? So you have a swing low down here, then you have a displacement, the high of this candle, the low of this candle, fair value gap, and we continued and we never really tested it. So as far as valid point of interest, to take a trade, to continue to the downside here, this to me is very valid because it's a fair value gap inside of a should I call, I can call it, I guess I can call it order flow level, because we tried to sell heavily down here. We failed, we pushed to the upside, then we dropped again. So this right here, this candle right here, I'm either expecting a trade at the low of this candle, at the open of this candle, or completely in this order block. I'm very aware of this, liquidity residing up here, but I'm not too worried about that, because I feel like if the market trades past this fair value gap, then we are definitely going higher. All right, and my entire analysis goes to shit. Right, so I'm expecting a sell, and I'm expecting a drop at least below this previous day low. That is my low hanging fruit, depending on how the market develops. Right, so what else? I don't need these two right here. I just need what is directly related to the current day. So this is my 15-minute analysis. Now I need to identify my midnight market open. Actually need to change this to New York time. Right, so midnight New York open is going to be here. And now one other thing that I'm noticing is that we have this huge gap right here. For people who trade auction market theory, it's called cash flow gap on futures. So you have this huge gap here. I guess ICT calls it the void, liquidity void, or volume void, or something like that. However you want to call it, it doesn't really matter. Just give it whatever name you want to give it, and I guess it'll be fine. Now, one thing that I do observe here is that, again, as I mentioned earlier, from a market structure perspective, we are trading higher. Now, if you compare the way the market is going up here to the way we came down with very force. And this happened in a matter of, you know, 3 hours, maybe two. Wait, one, two. So yeah, in a matter of 5 hours, we had all of this, all of this move. And here, this is a matter of at least 8 hours. So this is 7 p.m. all the way to, yeah, this is a matter of 24 hours that we are having this. So to me, this is a good telltale sign of the market trying to go down. If you ever in doubt as whether or not the market is going to trade up or down, just look at the current range that you have, a fast range. And if the market pulls back by doing this kind of, up, down, and up, down, and up, down, that is a good telltale sign that the market is trying to reach for a level or a POI up here to then drop. All right. So that's how I list from my personal experience with the market. So one thing that I do see, as mentioned earlier, you have this liquidity down here that has been taken out beautifully, and then we literally shot up. I think ICT calls it elephant dropping in a pool or something like that. So we shot up, we took out this high. So from a market structure perspective, right here you have a break of market structure. You have a break of market structure right here. And also before the break of structure, you have a pullback. Now, in case you're not aware of it, this pullback is very important. This is what you would call your inducement, or whatever it is, smart money concepts trader call it. So this is going to be your inducement, or some other people call it engineering liquidity or whatever, but I like to call it inducement in this case. So this is going to be your inducement, which means this needs to be taken out. Okay, this needs to be taken out, at least from a perspective of this tiny range that we see here, this massive buying force that we see here. This is an inducement. So even if you are looking for a buy, let's say your bias is not bearish, let's say your bias is bullish, even if you're looking for a buy, this is one of the places you want to look for a buy, below this inducement level. All right, so that being said, let's just play the market and let's see what the market gives us. Yeah, wait, this is the previous day low. Okay, that's good. I've identified that. Let me just mark this. Sorry, I have this OCD thing where I like every single stuff that I do to be perfectly, placed or whatever. I don't know why, but it is what it is. So you have a break of structure here. So this is the current structure we are trading, by the way. So you have a break of structure right here. We took out this liquidity. So technically you have a market structure shift right here. Relative equal lows. We took out this high, break of structure. If we want to buy, we wait for a trade below here. And if we want to sell from a higher time frame perspective, we're looking for a trade up here. That's how I look at it personally. Right, so let's play the market and let's see what the market gives us. Now, for any given trades or whatever, I'm always waiting. I'm always trading the London session. So anything before that, I'm not interested. I know how to trade the Asia session, but not with ICT, with auction market theory. So, but this is not about the Asian session here, and it's all about London session and US session. So let's just see where midnight takes us. All right, so this is midnight. Okay, nothing crazy is happening. Now, one thing that I do see again that's very interesting to me is what you have: break of market structure, up, first pullback after break of market structure. Now this becomes your true inducement, enticing people into thinking that we are selling. Okay, and this is your engineered liquidity. If you're confused about this, I can make a video, explaining all of that, but this is going to be engineered liquidity. All right. So you have your inducement, inducing people into thinking we are selling, and you have your engineered liquidity. Either two of them need to be taken out before you take a buy, or this one needs to be taken out before you take a buy. Now, in this case, you see that the market traded down. We tapped into this consolidation area if you want to create our inducement. Now, what I want to see is the market trade above this level, then drop below this level. All right. So if I were to take a trade up here, my low hanging fruit, instead of being previous day low, it's likely going to be engineered liquidity, or at least my first take profit. All right. So let's see what happens. Now I'm waiting for 230 here. Yeah, 230 is where I'm going to start looking at the market. Okay, so the market continued down, and let's just see what we are getting from here. 115. I'm looking for 230. 130. 145. 215. Okay, cool. So this is where we are at 215, and the market gave us, some sort of grab of liquidity down here, which makes me feel like the market is trying to go to the upside at this point. Even though we did not tap into our fair value gap or liquidity void right here, from a market structure perspective, at least from what I know, if the market, for instance, takes out this high, if we take out this high right here, I am likely to be, I'm going to be looking, for buys to here. All right. So this is a very good low hanging fruit. This is a good example of trading the opposite direction of your bias, or if you want to call it buy to sell or sell to buy. Let's say you're bearish, you buy to sell after. If you're bullish, you sell to buy after. In this example, I am bearish. All right. My main trade has to be somewhere in this area right here, somewhere inside of this order block. You know what I mean? But at the moment, if the market is showing me an opportunity to buy to get to that point, then that's exactly what I'm going to do. So from this is market structure stuff. Now this is the part where we look at ICT stuff. All right. So how can I analyze this from an ICT perspective? This is the low before 230. Now 230 here is considered the news embargo for the London session. I think this is 2:30 is Frankfurt market opening. Usually, when you look at futures, that's the time at which Euro news come out. So you have 2:30 coming. If you look at things from ICT's point of view, the first thing you're going to ask yourself is, what is the most obvious swing high before 2:30, and what is the most obvious swing low before 2:30? Now, the most obvious swing high before 2:30 here for me is going to be this level right here. Okay, most obvious swing high before 2:30, and the most obvious swing low before 2:30. Actually, let me just write it down. Obvious swing high before 2:30. Now, for my obvious swing low before 2:30, I'm going to mark this one right here. This is what I'm going to mark as my obvious swing low. Either this or this. Now, the reason why I'm marking this is because just from experience with the market, this will always going to get taken out. All right. This is going to be taken out, and this gap is going to be closed on futures always. It's rare that the market is going to open with a gap like this, especially during the Asia session, and you're not going to have a feel of this gap. Like, the market is not going to feel it. So the market is going to feel it. So by the way, let me just put this right here and put this right here, right? So the market is always going to feel it. So to me, because as well, this one is not completely formed yet. You don't have a third candle that pushes to the upside. This is not a swing low to me just yet. All right, before 8:30, because 8:30 can open, 2:30 can open, and literally from this candle trade downwards. All right, trade downwards and then push to the upside. So this right here cannot be a swing low to me, but this right here is a potential swing low to me. All right, because you have a void right here. So this is going to be my void. But in reality, this normally should be your obvious, if when we talk about something that's very obvious, all right, this right here should be your obvious swing low. Okay, so this right here is going to be my obvious swing low before 2:30. Obvious swing low before 2:30. Okay, so but the reason why I'm looking at this is because I'm expecting a reaction in this, inside of this gap or void, because I know the market usually fills this up before doing anything else. Plus, from an internal liquidity perspective, we are inside of a range right here, and I don't see the London session ticking out this low before trading at the very least to this order block right here. All right, so, and again, you don't have a market structure shift right here, so there's no point, in me looking far down here. I'd rather look at this area as my most obvious swing low before 2:30. Now, from a market structure perspective, this one has been taken out. We need to react somewhere, and this is the only place we can react to, really, before pushing the market to the upside. So this is all 2:30. I'm going to put a thing here. 2:30 is here. So now I'm going to jump on the 3-minute time frame, and actually I'm going to jump on a 1-minute time frame and see. This is too small. I'm going to jump on a 3-minute. I'm going to jump on a 3-minute time frame and see what the market is trying to give us. Now, by marking this level, now that I'm noticing, we actually have some sort of relative equal lows here. The market gave us some sort of relative equal lows. But most importantly as well, one thing that I do see here is you also have a relative equal lows here. Okay. Now remember, we are trading inside of this range, this bullish range, right? So we traded up, we have a pullback before break of structure, we break structure, then we have a pullback after break of structure. So this is our inducement. The market came down, engineered more liquidity at this level, pushed up, then pushed down. So what I'm expecting here now is for these relative equal highs to be taken out, and possibly even this high to be taken out. So I'm going to put relative equal highs here, relative equal highs right here, as something that needs to be taken out. Now, I don't know if the market is going to want to trade down first or trade to the upside, but if I believe my market structure analysis, normally the market should be trading down into this void, then trade up. Okay, trade down into this void, then trade up. So that's what I'm looking for at the moment. Now, I don't want to see the market take out this swing high before trading downwards. If the market takes out this swing high before trading downwards, I am looking for buys. I am looking for buys, possibly to take out this high. But this will be my low-hanging fruit first, because you have some very nice relative equal highs residing at this point, right? So, but 230 is not here. This is just me apprehending what may happen. We have some nice relative equal lows here, considering that these relative equal lows have been taken out. Liquidity plus relative equal lows. So this is where we are. And the market took him first, and we have this tiny swing high here. All right. So if the market trades above it, then I'll be looking for buys, and that would confirm to me that if the London session wants to trade all the way up here, then this is going to be a good reason, a good catalyst to take the market down and take out these relative equal lows here. That is if the market goes up without trading down here. But my bias is to see the market, or at least what I'm anticipating is for the market to trade down here first, then trade up. All right. So let's do this. All right, 230 is in. Let's just play it and let's see what the market gives us. Actually, I don't need this. It's fine. It's gone now. The market took it out. That inducement thing is important if the market were to trade above this. Oh, whoa, 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 whoa. Hold on, hold on, hold on. All right. So now I have this thing happening here, and it's quite surprising. Kind of caught me off guard, if I'm being honest with you. Let me just go on the 15-minute. Also, one thing that's very good about this FX replay is that it doesn't repaint the candle when you change the time frame. So it doesn't add up to a candle. It just keeps doing. It stays where it's supposed to be. So, from a market structure perspective, we took out this engineering liquidity, and then we kind of have a market structure shift. Let me just push. Okay, we have a fair value gap here. So this could be a good area to attempt to take a trade to the upside. Let me just make this green. All right, I'll make this green and reposition this to 230. Yes, 230 is here. Okay, so we do have a fair value gap here. And well, who am I to argue with ICT? I'm just going to be waiting for my trade at this area, at this level, and take it to the upside, especially if the market can wait for me before, can tap me in before taking out these relative equal lows. So I'm going to be targeting this level, and my stop is going to be right below this sell candle here, because there is nothing down here, that the market needs to go and look for before pushing to the upside. So this is how I'm going to look for it. Now, what's important here is the target. So I will be targeting today highs. So let me just look at the market structure again. So the market structure, we are trading inside of this range: impulse, base, impulse, liquidity. We traded down, we took out the inducement or the engineered liquidity. Then we have a market structure shift. My question is, how come the market is not closing this? I don't remember this market being like this. How come the market did not close here? Well, anyway, it's trading. I'm not here to be right. I just want to enjoy the process of analyzing the market and see if the market pans out the way I'm analyzing it. So for the time being, I'm just going to target this. Low hanging fruit for the time being is going to be these highs. Anyway, it's going to be these highs, and my first take profit is going to be here. So we're talking about from here to here is 4 points on the futures market. That's good money. All right, so I'm going to place an order. So I'm going to place an order here, risking $2 per trade, and this is where we are. Okay, so you know what? I'm going to put my stop down here. This is where I'm going to put my stop, and just to give me some room. All right, and I'm going to change my risk to $2. It's fine. $7. It's all good. I'm not complaining. And depending on what the market gives me, I'm going to see if I want to ride the trade all the way up here or if I want to wait it out. All right, so let's see. But this is where I'm taking my first partial. We could potentially have a rejection at this point because you have an base impulse here, so we need to have a reaction at this point. So I wouldn't be surprised if that happens anyway. There you go. Okay, you have another relative equal highs again right here. So let's just see if the market taps us in. Okay, we get tapped into the fair value gap. Beautiful. And now, all right, we're trading to the upside. First take profit is going to be at this level. Oh, okay. Let's just play it out. Right. So right here, I can take my first partial, so I will close 50% of my position. Actually, I can close 75%, but I'm just going to close 50. I feel like I need to raise more, but it's fine. And let's see what this area says, because we could have a rejection at this point. Trade down here. What time is it? It's 4:48. 4 more hours to go until 8:30. We could trade up here, come down, then go up. Let's see. This point, I need to move this to break even. Yeah, I was expecting a reaction here because of this tiny fair value gap. But if I'm being honest, I don't like the fact that the market is trying to go up, leaving this behind. So I hope this order block is going to do a great job at stopping the market. Okay, that's nice. That's nice. Another relative equal highs. Okay, all right. I'm in a trade. Okay, cool. So this is a nice trade. So this is my London trade. I'm just going to log that in real quick. Let me just go on the 5 minute. Yeah. So I'm going to log this trade in. Let me just put fair value gap here, FVG, right here. Why? Oh my God, what is wrong with this thing? Inside, right, okay. And I'm going to make this white, no, black. Yeah, black is good. And bold and 12. There you go. Right, so you have an FVG here. Let me just, it's a good thing that I'm recording this because just taking screenshots of your thinking is not really adequate now, is it? So I will just take this right here, and I'm going to come here, add symbol, and I will just paste it inside of oh fuck, okay, inside here. So this is trade number 1, London session. S&P 500. Daily bias is bearish. Side was a buy, and it is a profit. And I don't know what weekday it was, but this is. Do I even need to put the date on it? So it was the 3rd of Jan. All right. Okay. It was a Monday. So this is it. Now let's keep on moving. Let me just go back to the 5-minute chart. So what time is it here? It is 5:21. So, you know, just literally, you know, the 2:30 to 5:21 as ICT always talk about. We have that here. So we left the trade pretty, you know, in a pretty in timely fashion. Now I want to see the market trade down here. So I'm hoping, so far I don't like the way the market traded up into the order block, because you know I want to see some sort of short-term low being created, but there is no short-term low being created besides this one. So I'm guessing, you know, this OB is not going to hold it. Let's see, maybe the market is actually bullish. I don't know. Okay, I'm liking this. I'm liking this right here, but it's only 5:30. There is no point in looking at that if I'm being honest. Or just the market reaccumulating to go to the upside. If you're lucky, the market can trade into this fair value gap right here and then push to the upside. Could be a quick scalp for someone, I guess. Okay, inside of the VG. I don't think this market is going to go to the downside. It's I don't like the way the candles, you know, insist on just pushing to the upside. There is no short-term low. I wouldn't count this as a short-term low. It's more of like equal lows or whatever. I don't like to see this. So seems like my bias was quite wrong. Whoa. All right, this is interesting. I don't see anything. Uh, right now, I'm just questioning, should I take the trade or not? Okay, so let's just put 8:30. All right, let's put 8:30 on there. 8:30 is right here, right? So this one is not necessary anymore. This one is not necessary anymore. This one is not necessary anymore. And this one is, I'm just going to leave it there for the time being. This one is not necessary anymore. This one is now the one that's important. These relative equal lows right here. So you have relative equal lows, And actually, it's so let's go on a 15-minute real quick. I want to see something. Right. So again, we were trading inside of this range. We are trading inside of this range right here. And the market took out this liquidity below, then break of market structure. We have a pullback after breaking market structure. Now, because of the way the market delivered price, this right here becomes an inducement. This right here, so this low right here becomes an inducement, right? So you have, instead of relative equal lows, I'm just going to put inducement. Okay, so on a higher time frame, this is an inducement. If we go on a 1 hour, actually, I think it's going to present itself quite good. See what I was telling you about, this platform being cool at not repainting the candle depending on the time frame that you are, just like TradingView does. It's funny, I don't know how they managed to do that because they are using a TradingView. This is a TradingView frame chart by TradingView, but they managed to do something that TradingView cannot do with their backtest tool. So yeah, that's fairly interesting. So yeah, but again, yeah, like I was saying, we took out this low, this swing low, break of market structure, pull back after break of market structure, which becomes inducement, and then we push to the upside. So I want this inducement to be taken out. Now, one thing that the market can do, I'm not sure if we are going to have a reaction here or we are going to aim for previous day highs. That I don't know. It'll be to see. It'll be to see. But I do have a displacement here. I don't necessarily consider this as a swing, as a short-term low. Maybe on a 5-minute I can have something clearer. Even here, it's not really clear. But what will make it clear is if the market gives me a fair value gap. If the market gives me a fair value gap from this FVG level higher time frame FVG level that I identified, then I will be tempted to take a trade to the downside, right? So let's just see. Right, don't have anything. Okay, there's nothing here, right? Let's just play it. But guess what the market just gave me here? The market just gave me a short-term low right here. We failed to take out this high. So if the market gives me a nice displacement right here, that would be nice to take a trade, honestly. We're continuing up. We are reaccumulating again. Ooh. Okay. Now this is nice. However, I don't like that it formed before 8:30, so it becomes very hard to read. This is a very hard thing to read, but I like how we took out this short-term low. The displacement is not very convincing if you ask me, but you have a fair value gap right here. You do have a fair value gap right here. Now the question would be, do we take the trade there? I don't know. Honestly, I don't know. I don't have an answer. Maybe I should let this go. Maybe I should let this go. Let's see what the next candle gives us. Well, I'm definitely not letting this go. I like this displacement. So we have a low here. I don't trust that the market is going to come all the way back to this fair value gap. So what I'm going to do is put this right here. Now, again, I don't like the fact that this is happening before 8:30, but I'm I'm looking for these lows to be taken out. So this is going to be my low hanging fruit right here. Nice 17 points. I'm not complaining about that. Actually, that would be my first take profit. And I don't know how the market is going to react here. So I'm going to put it like this. Stop it at this swing low right here because it needs to be taken out. Let's see. Let's see what 830 does. So let me just place an order here. $2. Boom. Right. Let's see what the market does. I can get stopped out. If I do, it's fine. But let's just see. Okay, I'm in the trade. Very fast as well. Oh, I love this. I'm getting the same like, fear that I sometimes get in a live market. So it's interesting. So we in profit, which is nice. If we go, so here's one thing. If we push down too much from this point before 8:30, then that would be a good confirmation to me that, you know, the that the market is going to trade down. That would be a good confirmation to me that the market is trying to trade down. So let's see. We're pushing pretty hard before 8:30. That's mad. I don't like the way the market is going down. It's very choppy. I'm not impressed. But as far as low hanging fruit, we are already like this is a 1-to-1 at this point. Yeah, a 1-to-1. So because we're only down 4 points. So it's a 1-to-2 actually. Wait, this is 258. We are down 4 points. So 150 or something like that as far as risk to reward. Pushing down, pushing down. Okay. So this is 8:30 right here. So what is the significant low before 8:30? The significant low before or significant swing low before 8:30 is right here. You can see it from a 3-minute chart, but let's go on a 15-minute chart as ICT says. So the most significant low from 8:30 is this one, right? And the most significant high is this one. Now, I'm getting the feeling that if we are trading to the downside first, there could be a trade here, by the way, on this fair value gap. There could be a trade here. The reason being is there is no fair value gap to the upside, but there is a fair value gap right here, right after this tiny swing low. I'm sure if you go on a 5-minute, it looks like a swing low, sort of. Yeah, right there. So there could be a trade at this level. Plus you have this imbalance here that was left alone. I don't know. But as far as obvious swing highs and lows before 8:30, obvious swing low right here and obvious swing high. So now I want to see which one gets traded first. And if you don't understand obvious swing highs and lows, you need to go and check, I think it's episode 5. This is the episode where he explains it well. This episode right here. So if you watch this, I think you're going to have the answer you're looking for. So let's just play this and let's see what the market does. Reacting to this fair value gap right here. Nice one. Nice. Nice, nice. Now the market went too far down. I don't know if the market is going to come back up here, but if the market does, then this is where I'll be waiting for a trade for sure. And I'm kind of tempted to do that, really, to get out of this trade and wait for this one to come. I'm sort of tempted to do that, but I don't know what stops me. We are going down with heavy power here. Let me just check the 1 hour real quick. Even on a 1 hour, this is your fair value gap, especially since we took out this internal short-term swing low. So, but let's see. If we take out this low right here, I'm definitely going to close this trade. I'm going to close this trade right here and wait for the market to come back up here to take me to the downside, because I know there is going to be a reaction inside of this gap. They're always, oh man, every single time. It never fails. It never fails. Now at this point, I'm very deep into profit, so I don't want to risk it. I'm just going to close 75, but we took out this low, so I don't know why I don't know what I'm worried about. You know what? I'm going to close this partial right here at this point, and if the market trades back up, I'm going to take a trade at this point. Let's see. You know what? Yeah, I'm going to close 75%, and let's see what the market does. Okay, I'm going to move this to break even first of all. Somewhere around here. Let's see what the market does here. Okay, so I'm going to go on a 15-minute. You have a 4-candle pattern if you're aware of that, if you know what that is. And I'm going to target this level right here. I'm just going to take this candle as well. So target this. My stop loss is going to be literally where my previous entry was. And I'm going to target these lows right here. And again, this is going to be my partial. So let me just put this right here like this. 3-point stop loss, yeah, that's not too bad. $2 risk, and let's see what the market does. So this is still 8:30 or 9:15, so the market opens soon. New York opens, we trade up, tapped into the trade, nice. Oh my fucking days, hold on. Ooh, that was nice. That was absolutely nice. That was nice. This is what small money traders call sniper entry, I believe. This was nice. So this is my first take profit right here. So I'm going to close 50% if the market trades back down here. I think it will, because you have some sort of relative equal lows here. So oh, I don't need to close it then. Fuck it. All right, take profit hit. All right, that's cool. So yeah, that's it for the trade, and let's see where the market is trying to go. So I was talking about the 38.2 fib level, and with this much power, I think that's where we are going. But I don't need to ride the whole train. Again, low hanging fruit. I started implementing that in my strategy, in my way of trading, and that shit is absolutely fire. Honestly, it takes away from the headaches. It takes away the headaches. It takes away the doubt. You know what I mean? You just take the few points that the market is giving you. This is what, 30 points. I mean, it's not too bad. This is 27 points. Yeah, but you take what the market gives you and you just leave it alone. Like right here, it's 9 points. You just leave it alone, man. you leave it alone and you go on by your business. So let's just play it. Oh, we took out previous day lows. Okay, I did not necessarily see that coming, if I'm being honest. I mean, I know we are trading to the downside, but I did not expect this move to just literally take it out. I was expecting some sort of reaction here. That's what I'm saying. So, yeah. Now, normally, after a day like this, I'm done. There's nothing here left for me to trade. I'll just leave it alone and wait for the next day and whatnot. So that's exactly what I'm going to do here. The only thing I need to do now is just take a screenshot of my second trade. A screenshot of my second trade, which is going to be this. I'm just going to drop it here, right? Open it, S&P 500. SP 500, bias was bearish, side sell, stage profit. Right, this was on the 3rd of Jan, 3rd of January, and so far I am up, pretty well. Yeah, so I'm doing pretty well now. So it's not too bad. So yeah, end of the video, and I'll see you on the next video, which I'm going to record right after this. So I just don't want to make this too long.